Welcome, everybody. Good Thursday afternoon. Welcome to our Short Verticals webcast. We have folks that have been with us for a while and some new folks with us today. Feel free to chat in to the chat and say, hey, I'm a newbie, or whatever you want to say. We want to welcome you here as well as our familiar names that I'm always happy to see each time. How many of you are creatures of habit? I'm a horrible creature of habit. For years, I'll eat the same breakfast. For years, I'll have my furniture in the exact same place. I don't feel a need to move things around. I just am a real creature of habit. And I find that that bleeds in to my trading as well, that I like to do things a certain way. So if you are a creature of habit, today's class may really help you out. I'm going to teach you how to build a custom template for your trades, for your short verticals specifically, so that if you like to do the same thing every single time, we're going to put you in good shape for that. Now, I am joined in the chat by Kevin Horner. Happy Kevin's here. He's a great veteran of the markets. He understands what we're talking about here today. So as you have questions, go ahead. Feel free to put them in the chat. I will keep my eye on the chat. Kevin will as well. And we want to make sure you get your questions answered if possible. Those of you that are listening to this on the recording, when you have questions, go ahead and put them in the comments section in YouTube, because we go back, review those comments throughout the day, and want you to get your questions answered pretty quickly. Now, I do hope you're following us on X. I'm Connie Hill CS. Kevin is Kevin Horner CS. We'll post educational content, things we notice about the markets. We will share that information with you. Let's go through our disclosures and get down to business. We have a pretty full agenda here today. Options carry a high level of risk and are not suitable for all investors. What we talk about is for education and informational purposes. Do not consider it a recommendation. For the simplicity of our presentation, we won't take into consider commissions and fees, but just note there are going to be some, so you'll want to pay attention to that. We'll be using the Paper Money software application. It's what you download to your computer. It's the most robust version of Thinkorswim. A great place to practice strategies. In fact, if you wanted to do all the strategies, these example trades that we're looking at here today, Paper Money would be a great place to do that, so you can get your bearings on this strategy. Past performance is no guarantee of future results. Investing involves risk, including the loss of principal. When we're using stop orders, and we're going to talk about those today, if they are set up as a stop market order, there's no guarantee of the price that they might get filled at, so you just want to be aware of it. All right. Today we're going to talk about some aspect of short verticals. I'm curious to know how many of you in here have traded at least 2 short verticals in your life, either in your live account or your paper account. If you have traded a couple of live verticals, short verticals, I should say, let me know about it. Okay. I want to know how many people here are really fresh with this strategy. And those of you that come back every week, which I'm always happy to see, I know you have some familiarity with short verticals. We have a lot of examples. We'll look at the techniques and strategies that we're going to use as far as exiting. All right, one thing to know about short verticals is we can see a risk profile. And in the risk profile, it gives us an idea, what is our max loss? What is our max gain? Where is our break-even point? All right, several of you have been trading this strategy. You've made at least 2 credit spread trades. Perfect. Somebody says, I love getting the cha-ching, Mr. Ricebird says. Yeah, but as we go back here to this little graphic here, we find out the most we will make in that trade. And it's not going to be any more than that as long as we are working with both our legs and we're keeping them together, right? Our short leg and our long leg. And typically we're going to be selling a short leg. In the case of, we've got put verticals here where we want it to stay above a particular price. And in the case of a bear call or a short call vertical, we want it to stay below a particular price. So as we're doing our technical analysis, we want to see, hey, where might that point be? Can we find a sweet spot for the spread to go? All right, let's head over to Thinkorswim. We're going to look at some new trades, and then we're going to follow up on some existing trades. But on our new trades, we're going to teach you how to create a template, and then we're going to use the template for the rest of our class. All right, looks like the S&P is up a little bit more than it was a couple of hours ago in our last class. So That's kind of nice to see, right? Maybe it's responding to this area of support here. We'll see if it continues, right? RSI's headed up, a little bit of some upward momentum here today, which is nice to see when we're mostly long in the market. Now, let's come out to our very first trade that we're going to go with, and it is going to be a stock you probably have heard about before, Micron. Heard about Micron Technology? Yeah, I'm sure that you have. They have just been on a tear. You can see last week they had an all-time high here of over $1,000. Now, sometimes there's these expensive stocks and you're like, oh man, could I even trade options on that kind of a stock? Because we know, yeah, the options are probably going to be expensive as well. Now, as we're looking at what kind of an entry signal we have here, what I'm seeing is a real nice support area here about 854. And it's just been honoring that. And today it looks like it's trying to bounce up over it. And so some people might consider this a bullish entry. There are some people that like to sell even right at support and not even wait for a bounce. Today we're getting a little bit of a bounce, so maybe a little bit of a follow through action on that. Now, Micron has earnings coming up, but it's a little ways off. June 24th. Today's the 11th. We've got a couple of weeks to be in the trade. We could very well be out of our trade before it even gets to the earnings date. And we would plan to do that. We would plan to exit and not hold over earnings. It doesn't mean you can't hold over earnings. It doesn't mean that it's a bad idea and you should never do it. In fact, you're longer, say you're in some positions that you're trend trading and you've been in it for 4 months. Yeah, you had to hold over in earnings to get through that patch. But sometimes with these shorter dated trades and strategies, we're more interested in maybe capturing some profit and getting out of Dodge, right? Taking it and running. Okay. Let's do this. Somebody asked a question at the very, very beginning of our class, which I think is a carryover question from our last class. They just wanted to know where you go to get the scan. And really all you do is you come to the scan tab, and we had been in Stock Hacker. And then the filters are over here on the right-hand side where it says plus add filter. Okay, so that person whose name I totally forgot, that's where it is. Okay, let's come over here to the trade tab. Micron, widely traded, 33 million shares traded today on the stock itself. So typically that means great. It should have good option activity, and they don't always, but this is one definitely has a lot of activity on it. We're going to go through. If you wanted to maybe look at the ones with 21 days or 29 days to expiration or 36 or even 43 or 50, you could. We're going to take the sweet spot. We're going to take the ones that are 36 days to options expiration, and those are the ones we're going to be working with here. Now, if we're bullish on Micron, which we are, then the short vertical that we would want to do on it would be a short put vertical. So we'll be over here on the put side. Now, let me tell you what my columns are. Follow the giant green arrow. So we have our delta that helps us decide sometimes what strike price we want to use. This column is our open interest. This is the number of contracts that were sitting out there when the opening bell rang. This is volume. These are the number of new contracts today. And sometimes that's helpful to see, oh, today, man, there was a lot of activity there. And then I've got two columns here that say prob. And you're like, prob of what? Okay, we'll collapse that left side. Probability of expiring out of the money, which is what we want to see on a short vertical. And then last week, we talked a little bit about probability of touching and just knowing, in some of those verticals that we might sell, there's a higher probability that sometime before the option expires, yeah, it might go hit in that strike price area. Doesn't mean it will, and it doesn't mean the end of the world if it does, okay? Because we know, yeah, there's a likelihood that it would. Now, in picking out our strike prices here, it's really nice that we have some choices. And traders many times like to sell a 30-something delta or sometimes a 20-something delta. I know people who like to be a little bit more aggressive with this strategy, and they don't mind selling a 40-something delta. Their philosophy is, well, the probability of success is lower, but if I'm right, I get a bigger reward. And if I'm wrong, then it's actually not as severe of a penalty. Okay. So you have to find where your happiness is, right? Where your comfort level is, where you can sleep. Now today, let's see if these numbers still make sense. I was looking at doing the 820 and 810 strike prices here. Price of the stock right now is at 937. I'm going to swing back. I'm going to come down a little bit lower. Many times what I'll look at is I'll say, well, I want to see maybe a 60% plus. Actually, we might have to go back to that 620 delta if you're a person that says in your rules, I'd like to see at least 60% probability of expiring out of the money. And sometimes people say, well, I really want to go off the delta. Neither one is fine, right? You get to choose. You do some paper trading. You see what makes sense to you. And actually, I'd like to go, I think I'm going to stick with this. 820 is the 60% range here. We'll go 820 as our sell. 810 is going to be our hedge leg. So we're just going to queue up this order and we're just going to say sell vertical. And I'm going to go ahead and lock this in place so that we have some fixed numbers to work with. So we cannot make any more on the trade than 345 per contract. That's it, no more. Okay, as long as those legs are together and it's staying there as our credit spread. That means how much would we be risking in the trade? Well, we're going to be risking our $10 spread here minus 345. So 10 minus 345 says, oh, okay, our max theoretical loss is about 655. So we're risking 655 to make 345. Okay. Why do we do that? Because there's a high probability of success. When we're doing maybe some swing trades or things that are directional, we might not set up our reward risk that way. We might set it up otherwise, but the reason that we're doing it is because that higher probability in this case, I put us over here in the 60 plus range. Okay. Now, next step is this going to give you enough reward that you're going to be happy? Is the juice worth the squeeze? So let's go test that out. 345 divided by 655, our max theoretical loss, puts us up at about 52%, right? 52% is pretty healthy return. Some of you actually might feel uncomfortable with that high of a return. Micron is pretty volatile stock, so it probably is we're gonna see that in the option pricing. Okay, if you at this point you said I want to be more conservative, you could consider selling something a little further out of the money, with the trade-off of maybe seeing a higher probability of the option expiring out of the money and bringing in a lower credit, something less than 345. Okay, that's kind of how you gauge it as far as what you're comfortable with. Will, I think, really likes using a 30-something delta. Yeah, absolutely. I want to mention this. It looks like Malik Scott, I don't know if that said that right. We'll just call you Scott. Likes to have a 2-to-1 reward risk ratio. And like I said, on some swing trades and things like that, yeah, you might set it up that way. On verticals and short verticals and even long verticals, typically that ratio isn't going to be there. But I totally understand where you're coming from, that yeah, on swing trades, you might want to see that. Okay, now here comes the really fun part. This is where we're going to build our custom template. And let me say from the get-go that sometimes it takes creating this a couple of times for you to get comfortable with it. Okay, so if you don't pick up every single step and go, oh, yeah, baby, I've got it, I would understand. I would know that you'd need to do the process a couple of different times. Now, I want to go ahead and position size for our max loss here. Like, how many contracts can we do? Now, in this class, I'll say we could risk $2,000 per trade. And do you remember what our risk was? Was it 655? Yeah, 655 per contract. That says we could do 3 contracts. Awesome. We're going to do 3 contracts and we've got it set up. Now we're going to start building this custom template. And the idea here is we're building an exit for if we're on the right side of the trade, we're building a stop if we're on the wrong side of the trade. And we're just like the process. We like to do the same thing every time. So here we go. We're going to start building here. We're going to put here a first triggers OCO, meaning this order has to get filled before our two other orders that we're going to create here get filled. And so we're going to create two opposite orders. Okay, so I'm just right mouse clicking on our credit spread there, creating two opposite orders. Now, the next step is that you want to use this column that says link, and we're going to change that to say TRG, which means trigger. And both of these trades are going to be trigger trades. The trigger that it's tying back to is whatever we get filled on here. Okay, whatever that number is. Now I'm going to unlock it now. We've done our position sizing. We're okay here. This number might move around a little bit, which I think is kind of helpful to see for the next steps. Now, for if we do great and we want to start taking profits on this, okay? Some traders will say, I want X percent. If I get 50%, 60%, 90%, whatever that number is, they're like, that's the chunk of it I want to get out. I'm not going to try to get every little last bit out of it, right? We're not going to try to squeeze it to death. So what if we said, in this case, we're going to set up a template that says, if we get 70% of the 350, we're going to feel happy. We're going to say, get me out of the trade. So this little icon here comes in as a plus and a minus. We're going to click on it twice until it gets to be a percentage. And then this percent here that we're going to fill in will be using whatever we get filled at here. Right now it's saying 335. What we're going to do is we're going to put in a minus sign and we're going to type in 70%, which means when this value, 352 now, goes down by 70%, that means we've captured most of it. There's 30% left. We want to be out of the trade. And we're going to make it good till cancel. Now we're going to make this other side good till cancel as well. So this is targeting if we're right in the trade. That's what's going to happen. This one here is if we're wrong on the trade. And you know, sometimes it's hard to admit you're wrong, and so you don't want it to be too tight. But some traders would say, you know, if it goes 100% against me, I'm not going to do well in the trade. We don't want to let it go all the way to its max loss, because a max loss can wipe out several good trades you've already banked. But on this one, what we're going to say is if it goes against us 100%, which means I'm going to put a plus 100. Oops, I need to change that to percent first. There we go. If it goes 100% the opposite way, meaning that spread is increasing instead of decreasing, and it gets 100% better, which in this case, right this smack minute would be 640. It would be twice whatever this price is, going against us 100%, then we're saying we want to be out of the trade. Okay, this is going to be our template that we've set up here that we're going to go back to and use again. Okay, we've got it set up. When you get to this point and you're happy with everything, we're going to save the template. I'm going to point out a couple of things to you about the template. Number one, it is assuming that we took the next strike price in sequence. 820 in this case, and then it went and selected 810, and we were good with that $10 wide spread. However, if I had picked 800 or 790, let's just suppose I picked 800, we would be spreading it out by 2 strikes. And so when we save that template, it's going to embed that type of movement in the template. We're starting out here with 3 contracts. It's going to remember the 3 contracts. And many times 3 contracts will be about right for whatever your position sizing is. There'll be other times when you're like, oh, it's not 3. In this case, we can actually do 4. And you just go in and change the number. Okay. But this is always going to be embedded in the template as well. So this math, if we have 70% of 320, then 30% is left, we're out. We want to get out there. If it goes against us, and this is a little bit tricky because you're like, well, you've got plus 100% there, and that's actually right. If this value gets 100% of what it is, it's not going our way. We've got to get out. Now, there could be some questions on this custom template, so I want to take a look and answer those questions while we've got this up. Is there a way you can save this order, please? It's a little fast for me, and I want to understand it better. Yeah, this might be a little fast for you. This is a class designed for people that really have a lot of knowledge of how short verticals work, and you're feeling comfortable with it. Doesn't mean you're perfect in it. You may have to go back and review this, okay? The template actually is, I don't even think it's shareable. I don't even think there's a share item for it, okay? But this is what we're going to do. We're going to give it a name, and we're going to remember what the name is. We're going to click on this button that's to the left of the delete button, okay? And then it comes up with what it thinks is a good name. You might go, oh, that's not a good name. That is way too long and doesn't tell me enough. So I'm going to give it a new name here. And what I'm going to do on this is I'm going to call it Short Vert OCO, so that I know we're putting in a short vertical, and then we're doing our two orders, our get out of here, this thing's not working good, and our take profits site, okay? And I might want to add also on here, I'm going to put the number 3 for the contracts. All right. And I'm just going to get rid of the rest of it. You can keep whatever you want. Oh, this is the other element I like in here. I like to put in what those percents are. So I like to put in minus 70 and plus 100. Then I know which one it is, because I could create another custom template that maybe I go for 60%. And so on the 60%, I wouldn't want it to be pulling up this one right now. I would want to create a different template for it. So again, if you're a creature of habit, you like to do the same thing over and over again, this kind of helps you set it all up really quickly, which you'll see in our next trades. All right, so that's the name we're going to go with. You guys remember the name here? Short Vert OCO, minus 70% plus 100%. That makes sense to my brain. You name yours, whatever makes sense to you. All right, we're going to go ahead and hit save. Right now, that's at 320, so it's dropped a little bit. That's okay. And we're going to hit confirm and send, and we're going to put this in our short verticals grouping here. All right, I think there may have been a couple of other questions. All right, we got filled on it. Perfect. Let me just check that real quick. I forgot to change our stop loss order. So we have to redo this, which you can see how the template works really quick. And we're going to have to update the template name because I forgot to make it a stop. I left it as a limit order. Okay, got to fix it. We're going to go back. We already know we're doing 820, 810. I'm going to do a right mouse click. And normally what we'd do next is we'd come down here to sell custom, and then we're going to come down to whatever we named it. And I named it Short Vert OCO free 70 plus 100. We're going to pick that template, and look what it set up for us. It basically set up the whole trade. However, I need to change this one to be a stop. Oh man, yeah, I forgot to make that a stop. I'm going to resave the template. It's going to try to give it its name again. I'm just going to go back and we're just going to update. You can see I've done this a few times. Our one that we just created, OCO3. We're going to hit save. And on my other screen, it says, hey, are you sure you want to update this? And we're going to say yes. And okay, moved over to that screen. Good. Oh, maybe it didn't. Okay, it's on my other screen and it's not letting me move it. So I'm just going to hit yes on the other screen. Yes, we want to update that template. Okay. Our get out of Dodge order. Okay, it changed this on us. Okay, we've got to go back and redo this. Okay, we've got it. It needs to be a trigger here based on that price, whatever that price is. Oh, it's a little bit nicer now. When I changed it to the stop is when it got rid of the trigger and it put it back at man. Okay, so now we've got our trigger again. We're going to hit save the template. We're going to say which template it is. Scroll down, short vert. I'm going to hit save. On the other screen, I'm going to say yes, replace. Okay, now we've got it. And let's go ahead. We're going to send it in to our short verticals grouping. All right, now we should just get one sell order on the fill. Okay, that's better. And for those of you that recognized I missed that step of changing it to a stop, kudos to you for catching that real quickly. And he said, I named mine after Connie. You could do that. Just remember you might end up with a few of these, okay? You can always change the name. All right, well, let's see how we can use this template again, okay? Another trade we're going to get into, we're going to use this template because we're creatures of habit. And this time on our list, let's see if this still looks like a nice setup. First Solar. Oh, look at First Solar here. Nice run up, new 52-week high, a few days of pulling back. And what is it doing here? It's giving us a nice bounce off the 30-period moving average. Some people might even look at that as a hold. I know we're not quite to the close of the day yet, but if it were to close right now, this would give us a hold. Some people would say, well, it's at least trading above the high of this lower day, which is just by a few pennies, making it the lowest day. So we're going to do a trade here. We're going to be bullish. We're going to continue the direction that it is. It's still in a nice uptrend because if you look at where these lows are and you come back to where the previous lows were in this area, yeah, it is significantly higher, even though those 4 candles look a little sharp. Okay, they're like, those are big red candles. Okay, so come over here, trade tap, First Solar. It doesn't have nearly the volume that Micron has here, but not bad volume at all. I'm not going to go pick through the weeklies because I know they don't have as much as we would like as far as open interest. So I already picked through them. Okay, same thing. We're going to be looking for our delta to maybe size up a strike price, a 20-something or a 30-something typically. Some people might go for a 40. In this case, let's go with the 250, 240. Let's go with our 34 delta. It's kind of in the middle of that range. And we're going to do just a right mouse click. Normally we hit sell vertical, but we're going to come down, sell custom, come down to our template name, short vert OCO, select that. Boom, it's set up for us. Look at that. If we get 70% of the profit, take us out. If we get, this one didn't save where I needed it to. Really, this needs to be plus 100. Why did it not save it? We're going to update our template again. Trigger, 100% as a stop, GTC. I'm going to save over that. Not sure why that did not completely update, but we're going to come down. We're going to highlight it. We're going to say save. On the other screen, we'll say, yes, we want to update it. We'll test it out. So again, if you're a creature of habit, great. Now, is 3 the right number of contracts for us to do on this trade? Okay, position sizing. If we take our $10 minus the 365, that's going to put us at what, 545? Let's grab our calculator here. And on it, we'll do 10 minus 365. So 635 is our max theoretical loss. Can't lose more than that. We leave the spread there. That's the most we could lose at options expiration date. So that's 635. So how many contracts could we do here? So we're going to go 2,000 divided by 365. Not 365. That was supposed to be 565. 3.5 contracts. Well, we can't do a half a contract. So we're just going to leave it at 3. But again, if your position sizing had you coming up with a different number, you just go in and fix it. But everything else is set up for us. And I'm just double checking my order types here, because the last time it did not update that with our stop in there. It had it at a plus or minus, so we're going to keep it there at that %. Okay. Can you see how handy this might be if you're a creature of habit? Because it kind of takes some time to come in and do opposite orders. And this dynamically identifies what your target price is instead of you going to the calculator and saying, okay, calculator, if I get 70% of 365 and 30% is left, what is that? I'm plugging that value in. That's the long way, which some of you have learned that way, and there's nothing wrong with it whatsoever, right? Because you know in your head what those numbers need to be. So we're going to go ahead. We're going to send this one in. We're going to hit confirm and send, and we're going to put it in our short verticals bucket. Send it on its way. Hopefully we just get one fill order on that. Yeah, they always want to be on those orders. You want the OCO part to be good till canceled. We don't know if and when it would hit one of those spots. Our initial order doesn't need to be GTC. We're expecting to get filled at whatever the price is, whatever that market price is pricing out right now. Now, we didn't get an automatic fill on it. I'll make sure that it does before our market closes here today. As Jim said, yours didn't save that either. I wonder if they got a little bug in there. I don't know. We'll test it out here one more time. Kevin, yours reverted back to the same dollar amount on all 3 orders. Interesting. Interesting. Frank wonders, should we change the bid to a mark? If you wanted to, you could. You could change that. That would be all right. We're just using it on the trigger. Okay. Now, do you suppose this same template would work on something that's bearish? What do you think? Should it work on something that's bearish? Let's go try it out. I am going to say the trades, the list of where I got these particular example trades for us came off of this liquid options watch list. It is something we created a couple of hours ago in our long verticals and diagonals class. And these same stocks are eligible to be used for bullish trades and bearish trades. Okay, so I sorted by the % gain or loss here on the day. And I came up and said, oh, who are the stocks that are not performing well today that seem to have a valid entry? Okay, so we're going to go to one of those. We'll see if the entry still looks valid here. And we're going to go to ExxonMobil. Now, you guys know oil has been on the rise, right? Things going on in Iran have increased the price of crude oil. There's a lot of things that crude oil goes into, not just our transportation. However, what I'm noticing on this stock right now is that it's in a descending triangle pattern, which means likely to continue once it breaks down below this support, because our lows or our high points are getting lower, and then our low points are staying pretty steady there about that 144 mark. Okay, you can get in 3 different places on a descending triangle. You can get in on the bounce here going down. You can get out. You can get in if it breaks that support level there. That's another time that you could consider getting in if you wanted to. Now, in our case, we're going to do a short call vertical here. Okay, so we're going to structure it bearishly. We're going to see if that template's going to work for us. And then we typically just want it to stay below a certain area so that if it goes flat, fine. If it dinks around here in the triangle for a while, fine. We're just wanting it to stay lower than our short strike price that we're going to set up. So let's come over here to the trade tab. There's our ExxonMobil. These guys trade a terrific volume of shares. And so we can see here we're going to do the July 17s again. Again, if you wanted to pick through the July 2s or the July 10s, you can. And we are going to sell here. Let's see if this still makes sense. I had said we're going to do a 155, 150 short call vertical here. So what's the probability? I'm gonna collapse this over. What's the probability of expiring out of the money? It's about 67%. There's a probability of touching actually about the same 66%. So there's a 2 out of 3% chance it's going to go touch 155. Okay. But look at that open interest and volume activity. Yes, there's a lot of people out here trading these contracts. That's what we want to be looking for. So on our short vertical here, oh good, we just got filled on it. We're going to do what? We're still going to say sell. We're going to sell custom. We're going to go down and pick our template here. And let's see. All right. It saved it this time. Happy day. All right. So question is, does it still work? Well, it's still going to say, all right, take the credit, whatever we get filled at. If it's 129, 130, whatever it happens to be, we get 70% of it, we are out of there. Or if it doesn't go our way, if First Solar comes out with, or Exxon rather, comes out with great news and it pops up, it might warrant getting out, even before it hits our stop here. All right, but the same template can serve multiple types of stocks. Again, a key here is on this, we were using it and it just went to the next strike price in order. And it knew to go down and grab the 155, right? Because of the nature of a short vertical and that logic already being built into the option chain. Okay, so is 3 contracts the right number? Oh, we're going to grab our little calculator here. Let's see if it's the right number. We're sitting here at $1.29, so we're going to take 5 minus 129, which means we have risk of 371 per contract. Again, risking more to make whatever because of that higher probability, which right now is about 67%. And then in the strike price, I do want to go back to the chart here for a moment, and then we'll finish position sizing this. With our short leg there at 155, well, where is 155? Well, it's about here, okay, as close as my mouse can go to it. So this thing could go sideways, it could go down some and start helping us move to our profit target more quickly. We'll experience the time decay. And if it just were to go sideways, we're okay with that too, right? These turn out to be trades of a little bit of patience. All right, so going back to our template here, that's looking good. We needed to do our position sizing. So again, we can risk $2,000 per trade, and we are going to be risking 371. Oops, 2,000 divided by 371. Oh, let's try it again. 2,000 divided by 371 is, we could do 5 contracts here. Okay, that's fine. We'll just update the contracts. Not a big deal. I'm going to change this to the number 5. And this is a little hard to see, but there's a link here. It's in red, and that black background doesn't show up super sharp. But if you click on it, then it just moves the quantities in the other one. So all you do is change the quantity here on the first one. Boom, it changes it throughout. Okay. We're set. Oh, good. We even have a little bit more of a credit. We'll be getting 70% of 132. That's what we're going to be shooting for on that one. Going to hit confirm and send. We're going to put it in our short verticals bucket. We're glad our custom template saved correctly. And off it goes. All right. Let's see what the other questions were that came in. Lakshmi said, you know, the first trigger OCO is working. If it is OCO, it's not showing the percentage for me. You'll have to check with the support team to figure it out. It should be. Oh, what error didn't it like here? Unexpected error. Huh? Let's try it again. I'm not sure why it's giving me an unexpected error, because you're right, it is unexpected. I'm gonna take a hunch here, and if my hunch is right, we may have to report an error. I think it might be throwing this error because I changed it from 5 contracts to 3. That shouldn't matter. But I think that may be the problem. And yeah, okay. Let's do this. Let's delete our order. We're going to queue it up again. Oh, maybe it got filled. Did it get filled? Not canceled, not rolling. Filled orders. No, we don't have our Exxon on there. Okay, let's just rebuild it real quick. This is kind of acting like that order sitting out there. Okay, it did go in, went into our working orders. I don't know why it was throwing that error message out there, but it went out here properly. I thought it was totally blocking it. In fact, we have it 1 time, 2 times, 3 times. We really don't need all 3 of these, do we? Let's do cancel this order, cancel that order. And now we just have one with 5 contracts in it. Okay. Hopefully you don't get that error message. If it pops up on you, come out here like we just did, look in the working order, see if it's really sitting there. And that's just the way we need it to be. Okay. I want to follow up as we have a little bit of time. I want to follow up on a couple of our trades from last week. Those of you who weren't here, we were kind of focusing on this idea that there's a probability of the option touching our strike price. Now we put in 3 trades. Let's just kind of pull this back here. We had a trade on GM, a trade on GE, and a trade on Merck. Here's Merck. Merck hit our profit target today. Okay. And so we were out. It had a nice bounce here. Let me just show you these charts here real quick. With GE, it's still working fine. We're going to let it work. With GM, we're down on it, but it's starting to turn the corner. You'll see when we change the chart, but we're going to just let it continue to work. Okay. Merck hit the profit target today. It started out pretty nice for us, had a big, nice run up here, and then it just kind of fell and then popped up here today. Some people might have liked that as a fresh new entry. In our case, it just went ahead and hit our profit target, which is perfect. We can be happy campers about that. The GM trade is the one that's not going as well as we would like it to. I have it diagrammed here. I like to do that. Say, hey, what's the spread? Where's my short lag? So I know where I would like it to stay above. And really, today's the first day that it's come down and kind of hit where that short strike price is. Nonetheless, it's still giving us a little bit of profit today because stock's rebounding a little bit here. So we're going to let it continue to work. And GC, we're already up on. And you can see it's just gone flat, and that's okay. Can these trades just go flat on us? Yes, they don't have to move. We would like for it to stay above this 310 area where I've got my blue line. We would love to stay there. Yeah, 310, 320. So here's that. Let me just look at something real quick on it. That was GE. I think I put the wrong numbers in here. It's 310, 300, and I put a 320. So I'll go back and change my documentation, but it really is short at that 310 strike price. All right. Now, one last thing. I hope you guys are subscribers to our Trader Talks channel. There's folks joining us new all the time, and it's helpful if they can see where the heck they do this. Now, in the bottom right-hand corner of your screen is a little YouTube logo in green or blue. You click on that logo, that'll let you subscribe. And then this little thing here that would have said subscribe would not be there. If it wasn't there, or if it was there and we hit subscribe, then it disappears. But it just makes it easy to find our content that we're working on, right? We're in our Short Verticals webcast. Next up is going to be Mike Fairborn. He's going to be teaching trading with ThinkScript. He's going to incorporate ThinkScript into a scan. Mike is making this class very palatable for even those of you that are newer, okay, to get the idea of how to use a ThinkScript and how it works. So highly recommend that class. Kevin, I think Kevin's done for the day, but he'll be back in the morning, first thing, bright and early with today's market, looking at what happened overnight, what things are moving in the morning. He does a fabulous job there. I know lots of you enjoy his class. Okay, so then you just kind of can see the lineup. You could come out here to a playlist and catch up on, say, old classes that you weren't privy to, but they have some interest to you, right? Yeah, absolutely. That's a great thing that you can do. All right. Kevin, thank you for your help today answering questions. I think we caught most of the questions that came through here. If I didn't catch your question and it didn't get answered, go ahead, send me a message in YouTube, right? Go just pull up the video, write out what your question is. I'll go ahead and answer it as soon as I can. All right. So subscribe, follow Kevin and I on X, Kevin Horner CES, Connie Hill CES. If this was helpful to you today, hit the like button on your way out. That lets other traders find the content. All right, you guys, we're going to turn you loose. Next week, we're going to follow up on those 3 trades, see how our custom template did for us. Okay, we'll see you in 15 minutes at the top of the hour. Bye-bye.